guys, welcome back to the channel. Welcome back to another video. Have you ever wondered how the heck can we pick up the best possible trade setups? How can we get into the best possible trade setups? What do those look like as they're developing and as we get into a new session? Well, in this video, we're going to break down some of the best setups that occurred today and how could you have picked up on these particular trade setups so you in the future can use these same techniques in your particular trading. Let's first start off with EuroJPY. So EuroJPY, you could see here that on the 3-hour time frame we're coming off a reset, which essentially means to me or to us that how we trade is we're looking for buys only. We only care about looking for buys. So if you were trading the London session, right, you would have had this move here, this retracement, essentially that happened. This retracement, where does it go to? It goes to the middle of the range, right? The middle of the range is where we look for what type of setup. We look for a type 3. So the pattern itself that we're looking for is this right here. That's it. That's the type 3 setup. That's the pattern that we're looking for. Now, as far as how to get into the trade, when would you be able to get into the trade and how, right? Well, if we go back, let's just go back here to see how this trade ends up developing. So you can see here that we're starting to get indecision, right, when we get right to the middle of the range. And then most importantly, we get this right here. This candle goes all the way down, okay, and basically takes out all of this trading that has been done since 4:15 in the morning. So since 4:15, trading has been ranging and moving sideways, consolidating around the middle of the range, and then finally right at 6 o'clock, boom, you get this candle, takes out everything. All right, so for traders that got in super early, they were taken out on this candle. Now the next candle provides us with the best clues, because once traders come down, or once market makers come down and take out all these orders, look what happens, right? Another candle of indecision starts to make, and then you start to see that market makers don't want to be in this area anymore. They're done. All right, so very important that you need to understand the story of what they're telling you with their candles that they're presenting to you, or what the candles are that are being presented to you. What's the story behind it? Every candle has a story. It's your job as a trader to put the story together so you could find the very best setups. So as we start to move, and you can see that market makers no longer want to be in this area because they've already picked up all of the orders that they need. Now, if we take a look, we don't have, this doesn't give us like a normal railroad track, star pattern, quarter wood, things of that nature that we would normally look for to get in on a trade. But we do have a backup to that, which is essentially price closing above the 13 EMA, which is what we get right here on this candle. Most importantly is the fact that if we really take a look at this candle here, at this blue candle, it closed above all of these other candles here, right? So all of this, since 4:15, 4 o'clock, 4:15, this candle closed above all of it. All right, and that's significant because that, again, tells us a story of what's really happening. And so market makers don't want to be here anymore. They want to go up and continue with the trend coming off the reset to go and seek higher prices. So what does that look like for us when we're trying to get into a trade setup like this, when we don't have the standard, star pattern railroad tracks that we normally would use to do that? Here's what you would be starting to think about, right, when you're talking about a setup. It's 2-to-1 risk reward ratio is always what we look for, but you could see here that we're risking about 19 pips or so on this particular trade, which is not a whole lot, but it is something, right? So for us, we would rather have a pullback if we can get it that'll allow us to get a better entry. So essentially somewhere in a range of 15 pips for our entry. Typically when we get a bull candle like this, I typically like to split it in half. And if I can get a pullback that goes at least half of that candle, that's essentially saving me, half of the pips on the stop loss. Okay, because one thing that you have to understand is that if we are wrong in what we are interpreting what's happening, we want to be wrong literally right away. We don't want to wait 10 hours, 8 hours. We don't want to be stuck in this sideways. We want to know, are we right or are we wrong right away? And so the point of having a stop loss right below the closest low here is the fact that if we are wrong, we just want to be wrong right away. We don't want to pretend to hold this out for as long as possible. All right. On the next candle, we end up getting the pullback. And that pullback is what we use to get into the actual trade setup. If we go 2 to 1, here you can see that we can go 2 to 1 basically back up to the top of the Asian range. All right. And so this is what I like to call a simple and easy take profit, because we're just trying to go back to where prices have already been, right? We're not trying to do anything crazy like all the way up here or anything like that. We're trying to literally just go back to where price has already been, all right? And then obviously you could see what happens. This ended up going much higher, obviously. Yeah, so about 2.8 to 1 risk to reward ratio, almost a 3 to 1 risk to reward ratio on this particular trade. But understanding the story behind the movement of price is going to allow you to have an advantage. Here's another one. This is pound CAD. Now, what's the story on pound CAD? Well, you could see from the 3-hour time frame that we're coming off a peak formation low, and we've been rising now ever since the 17th of April. So well over a week and a half already on this pair. So if we measure this out, right, we're already at 525 pips. So we know that we're already at a max level for a cycle, okay? So we know that we're expecting essentially a peak formation high to form here at any moment, because we know we've already extended out to a full cycle. We've already grabbed orders that are sitting right here where I have them marked. Okay, so we're expecting a peak formation high to form. During the London session, we get a straight move down, and then right at 4:15, we get the start of a retracement. Okay, the retracement starts super early on this, but what's more important is the fact of what happens when the retracement starts to come to an end. So if you take a look, where does the retracement start to come to an end? It retraces all the way back to the middle of the range, the middle of the Asian range. Do you think that that's coincidence, that it's just coming right back to the middle of the range? And then most importantly, the biggest clue of all is right here. This candle right here. That candle is the biggest clue of them all. What do you think that candle's story is? At one point, this entire candle was blue. At one point, at the very beginning of that candle, was fully blue. And then it ended below the previous one. Okay, so that's right there is your clue about what's happening. Now, another thing is the fact that what do we look for in a continuation trade? What factors are the most important things that we look for when we're talking about a continuation trade? Well, we want to see a major pullback that's happening at the very beginning of the New York session that started in the London session, right? So we have all of the same behaviors that we're looking for. And this candle here gives us the last as far as what we need to look for of the story of the retracement for a continuation trade, right? We are expecting a peak formation to form, okay? We have the aggressive move at the beginning of the London session, and then we have the aggressive retracement. The retracement just doesn't go anywhere. It goes right to the middle of the range. Why? Like literally to the line. Look, to the line right there. Do you think that's just coincidence? It's not. So what do we need essentially to get into this particular trade? Okay, what actions are we going to need or required to get into this? Typically, we would look for the same thing, like a star pattern, railroad track, things of that nature. But if we can't get that, then we would need a major engulfing candle to take out a lot of this price action and tell us, hey, we're done. Even though this candle right here, this wick, is the first clue that we're getting from market makers that they are done searching for more orders. Next candle comes, and boom, there you go. This candle literally takes out all of this from trading, all the way back to 530, okay? And again, the same concept. If you take a look at the candle, all right, it closed well below all of this, okay? So this is a clue that we want, that we're waiting for when it comes to looking for a continuation trade. Now, what do we need in order to make this work? Like, how is this going to work with this big candle, right? If we take a look at what you're looking at for risking on this candle, okay? If you put your stop loss above the wick, then you're looking at, obviously, a ridiculous amount of risk. Now, if you are correct on the story of what you're seeing from this candle, there's no reason that market makers should go back up into this area because it's already been collected, right? All the orders have been collected already, especially with this candle being present. So what can you do? You could lower your risk by putting your stop loss above that same candle. And then where would you be aiming towards in order to get a 2-to-1? Well, if you just look to the left, okay, you have to look for the closest, biggest structure that you would have that you can get a 2-to-1 risk to reward ratio. So if we start coming down, you could see that this area here is the last bit of structure that it has that's left before you get a major drop off all the way down here. So all we're trying to do is literally get 2-to-1 on this particular trade. All right, and you're able to get 2-to-1 here. If you get a pullback, which is ideal, right? The pullback would be like half the candle, let's say. But you have to understand that we don't always get pullbacks. In order to get into a trade like this, you have to minimize your risk. That's the only thing that you can control when you're trading is risk. How much are you using for your lot size, and how much of it are you risking on your trade for your capital? We can't control whether the price goes up or down, sideways, or any of that stuff. We can only control the risk and how much we put on. For us, the entry is going to be either on the pullback that we would get on the next candle, or if there's no immediate pullback, then the trade is automatically triggered in, and you would be looking for a 2-to-1 risk to reward ratio on the trade. Obviously, you know that we don't really get a pullback on this particular candle, but you could see the movement immediately within 3 candles right away, and you're done. The story, the important thing about this particular trade setup is to understand the bigger picture of the story that we're getting from the 3-hour time frame or from the 1-hour time frame, whatever higher time frame you use, because 1-hour time frame is going to tell you the same thing, right? It's going to tell you the same story. We've already passed 3 times ADR, and we're expecting a peak formation high to form at any moment. When you get this evidence together, you can start to put the fact that we're creating a peak formation high here. Well, if you're creating a peak formation high, guess what? You're going to have a lot of room to go down, right? So taking a trade like this, where you have this big candle, okay, and not much of a pullback, allows you to take the bigger risk because you're understanding what's happening on the bigger part of the story, which is the 1-hour, 3-hour time frame. I would tell you that you would not take this trade setup with your normal lot size. Remember, you're the one that's controlling the risk. It's the only thing that you can control. So because you're risking more, okay, on this particular trade, and by the way, on pound pairs like this, okay, every pair has its own value, its own pip value. Okay, so understanding that on some pairs you're going to have to risk higher in the form of a stop loss than you would on another pair. So compare, let's say, pound CAD with Euro USD. The pip value of Euro USD is much less than you would see on pound CAD. So you could risk more on Euro USD and lose less money. Okay, but here, just risking 15 pips on a trade, if you were to lose that trade, you would actually lose more money than you would if you were to take in the 15 pip stop loss on Euro USD, because the pip value of this pair is much more money, much more higher than Euro USD. So understanding that aspect, that you have to, on some of these pairs like pound NZD, pound AUD, those pairs are extremely pip value high. So because of that, you're going to have to risk more in your stop loss. But the counter effect of that is that you can control the lot size. So on a trade like this, for example, if you're trading, let's say, a standard lot size, and that's like your normal lot size that you use on every trade. So for this, since you're risking more as far as pip wise, you may use, let's say, a half a lot instead lower your risk by half when you're taking the trade. But these are just literally 2 examples. There were a ton today. You could look at Euro AUD, same behavior, coming off a peak formation high, right? We're looking for sells. What do? We get another continuation trade. Okay, same behavior as this one gives us a pullback. It's the same thing. So there are a lot of trade setups that happened today that you could have got into in the US session. Same thing here, EuroCAD. Coming off a peak formation high, you have a huge move up. You're at the very beginning of the US session. If you're all the way up here, what are you looking for? Think about it. If you're all the way up here at the very top, okay, if this is what you walk into in the US session, what's the only option that's up here? The only option that you have up here is a reversal. That's it. It's a reversal. So guys, I hope that you found value in this particular video. I hope that you're able to learn something, and we will see you in the next video. Found value in the video and in the content that we make on this channel, and you'd like to get more in-depth on our strategy, come join our next masterclass. Sign up for it using the link in the description. What you get for what you pay for is an unbelievable value for this particular masterclass. First, lifetime membership, so you'll always have access to the course itself, but you're not just getting one course. You're getting the masterclass, you're getting the previous mentoring course, you're getting an advanced course, you're getting access to the full unedited version of the Blueprint Summit videos. You have access to group sessions on a weekly basis. Every Sunday, we get together in a group setting, and you can ask as many questions as you want. Anything you want to ask away. We also give you access to the previous group session archives, which right now it's sitting at over 110 hours of content, okay? We give you weekly analysis, we give you midweek analysis, update videos, you get MT4 and MT5 indicators, you get a customized trading journal, you get a customized backtesting journal, and most importantly, you get mentoring private chat through our Discord server. Okay, so everything you could possibly need to trade, you get from this masterclass. So join us, guys. We look forward to having you. We look forward to helping you reach your goals in your trading journey. Link is in the description.